Obviously, a short market week. Seems like we've continuing to see this bounce since Tuesday reports. What are you looking at in this grain trade today?
Yeah, we're reversing off of the lows that we posted earlier in the week, Don. So there's a couple things at play in here. One, that the funds may have said enough's enough as far as the short selling, and we're getting a little bit of short covering or some buying interest coming in to end the week in here. There was a forecast for some really hot temperatures this week, and I don't know that it did any significant damage to the crop. If in fact it would continue to be hot and turn dry, then it could, but that's not really in the forecast. So forecast isn't really beneficial for continuing of this rally. But the U.S. dollar is breaking pretty sharply today after that unemployment numbers that came out. Those weaker than weaker than expected jobs that were released this morning really put some pressure against the U.S. dollar and has kind of a real ripple effect for commodities in general. We've seen the strength in gold and silver, copper, and then the grains. And if you look back at some charts, you go back to mid-May when the U.S. dollar index broke its downtrend and started trending up. That's about the time when the grain markets all started to trend lower. And so there's certainly a correlation to a weakening dollar should be a little bit positive for these grain markets. I think we're seeing some of that in play today, as well as additional short covering just because it's a 3-day weekend and there's a lot of uncertainty after that 3-day weekend. And once 3-day weekend is over, we come back Sunday night, we'll reassess what the weather situation is telling us, and then maybe take another move there. But I think producers are certainly looking at this as a kind of a last opportunity to make old crop sales, and that will limit the rally in those old crop futures.
With that dollar, what's that mean for interest rates?
Yeah, well, the trade had been expecting as many as 3 interest rate hikes this last half of the year, last 6 months. And I think that was pretty pessimistic that we'd have that many rate hikes, especially with seemingly the war coming to an end and crude oil prices lowering. That should ease some of the concerns about inflation. And this dollar, I think, kind of confirms that thesis. Dollar dropping in here tells us that interest rates are probably not going to rise, even if they hold steady and not have a cut. That should be positive overall for our economy with the cheaper energy values that we're starting to see, cheaper gas prices. A lot of those inflationary costs are going to start to come down.
We saw some cash cattle business yesterday, $3-5 lower. Have we seen more activity here on a Thursday?
Yeah. Were you asking about cash cattle trade?
Yeah.
Yeah. We did see some $3 to $4 or $5 lower yesterday, and a little disappointment to the trade. I don't think it's a complete surprise, but a little bit of a disappointment. Futures markets certainly anticipating we're going to see cash trade lower this week and in the future weeks. It was about this time just after the 4th of July a year ago where cash markets started to fall. The cutout values really dropped sharply, and I know the market is fearful that that'll happen again, but these futures have already priced in a pretty steep drop in the cash markets. So it makes it hard to trade. Funds that want to sell this market, they seemingly are selling the opening, but we're not getting a lot of follow through because of the discount the futures have to the current cash already. We haven't seen real additional cash trade yet today, but I think we'll see a little bit of cleanup trade before Saturday for sure, maybe some even on Friday.
Anything else we should be looking at here, Brian?
Yeah, I think that's the biggest things that we've seen here. Beef sales, I do want to mention, we're marking year high easily, 126,000 tons today. That is just an outstanding number. We've been averaging between 10 and 14,000 metric tons the last 3-4 weeks, and to have a number like this that just blew away those averages, certainly a surprise, but very healthy to see that maybe that'll help out some of the softer U.S. demand if we have better export business in this third quarter.